Welcome to the Simply Financial Podcast. I'm your host, Christopher Calandra, and today we're going to use a little bit of a new format. We're using video that's going to be posted on YouTube. In previous seasons, we've only done the audio, but welcome to the podcast. I hope to increase your financial IQ with today's episode. I want to talk to you about something called the wall of worry. But before we get into that, I want to discuss a recent Gallup poll that I think really captures the zeitgeist of the country right now. So it's a Gallup poll on the view of the economy. Question number one, I'm reading off my notes, says, how would you rate economic conditions in the country today? And this is not surprising, but literally nobody said excellent. 11% said good. 34% said fair, and 54% said poor. What that means is 88% of the American public, at least based on this Gallup poll, and it seems to ring true to me, says that the economy's either doing fair or poor. Those are really bad numbers. Question number two, right now, do you think that economic conditions in the country as a whole are getting better or worse? Only 13% said better. 85% said worse. These are really bad numbers. If this was a political show, we could talk about what that means for the Biden administration and the upcoming midterm elections, but clearly it's a political problem for the president that the economy is bad, or at the very least, the American population think that it's bad. I saw another poll today that said that 78% of the Democrats polled thought that the country was going in the wrong direction. So it's not just a Republican thing, not just an independent thing, but all Americans seem to agree that something is wrong. So the wall of worry, bear markets, which we are in because the market has had a decline of 20% or more so far this year, at least as of this recording. And I think you could agree and you understand that bear markets do give way to bull markets. Tough periods are followed by periods of resurgence. We kind of get that. What I want to keep an eye on, what I think is important to watch for, is the wall of worry. This is an old Wall Street adage, and what it talks about is the tendency for financial markets, for stock market in particular, to rise in the face of big problems. Clearly we have big problems, and clearly the Americans feel this way, including yours truly. We're in a foul mood as a country. I used a fancy term, zeitgeist, before. But it seems like the country's in a foul mood, sour mood, when it comes to the economic conditions and outlook in this country. And the Gallup poll, as I said at the top of the show, seems to capture this. And there's lots of other examples I could point to. I think you get the idea. So back to the wall of worry. It's the tendency for financial markets, the stock market, to rise in the face of big problems. Because, and this is important, they rise because it usually turns out that the problems are maybe temporary, maybe less severe than was feared, or that they are eventually resolved and mitigated. Somehow, the resolution can often take place quicker than anticipated. What I want to see in the second half of the year, what I'm going to watch closely, and I suggest you keep an eye on this as well, is to see if the market can climb the wall of worry and begin recovering. This doesn't happen 100% of the time. It doesn't happen 100% of the time, but I think it can in this instance. There are a few things at play that I could see leading to a recovery and a climbing of the wall of worry. For one is the midterm elections. If the population is in fact really unhappy with the administration and the direction of the country, or just in the direction of the country, not being happy about that. They may just take it out on the party in power. I'm not making a political commentary here. I could certainly do so, but that's not the purpose of my message today. The purpose is that with the election, you could see changes with the Republicans taking control of one or both chambers in Congress. If you look at political polling, that seems very likely. Again, that rings true to me. And if that's the case, that may improve some of this economic outlook. It doesn't need, the wall of worry doesn't need to be climbed all at once. But if we could get some good news or some less than expected bad news where things seem to be improving even a little bit, that could begin to create an environment where we could start to climb the wall of worry. So the election, I think, looms large. I believe the markets and the country as a whole will focus on that a little bit more as we move through the summer into the fall. Secondly, I believe there's a chance that the supply chain issues we're having in this country, which are significant and widespread, there's also lots of reasons for it. We could debate what those are, but it's not a simple problem. But with relation to the wall of worry is if we could get some of the supply chain issues reduced, not fixed completely, just improved, better than expected, some good news on that front. I think that could trigger some climbing of the wall of worry, give the markets a reason to look towards the future, getting over this nasty session we're in the market. And the third thing to watch is confidence in the Federal Reserve that has swung into action, beginning to increase interest rates to try and wrestle inflation under control that clearly has exceeded expectations. Inflation numbers have exceeded the expectations of the Federal Reserve as well as the Biden administration and lots of economists too. But now that the Fed is in motion and they have signaled with their 2 interest rate hikes so far and expectations that they will be more, they are communicating to the market, to the country, that they are serious about dealing with inflation. And if that happens, and they could have some success in having inflation begin to wane, not go away, but at least stop going up, maybe get some slight improvement in the numbers where it's not growing as fast, that I believe will be welcomed. And I think these are 3 things that could lead to the wall of worry beginning to come into play and start to climb the wall of worry. So that's what I want to watch for in the second half of this year. I think you ought to as well. As I meet with clients and discuss things in the second half of the year, it's going to be part of the conversation because I believe it's a key thing to watch for, as I've said several times in this discussion. So that's today's episode. I hope you found value in it. If you did, please check out our website if you're not a client of ours, or even if you are, go to elliottwealth.com. You could find more information about me, the team, how we work with clients, helping them achieve their financial goals, helping them win with money, helping them work through this difficult period we find ourselves in. So check it out. You could also sign up for a complimentary consultation if you'd like to talk to us about your individual situation. Also, I always ask, and I know all podcast hosts ask for this, but if you haven't subscribed to the podcast, please do so. That would mean a lot to me. I would be very appreciative. Thanks for listening today. I'll be back with you on the next episode of the Simply Financial podcast very soon. Thanks again.
The views expressed are not necessarily the opinion of SagePoint Financial Incorporated and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of the information provided at these websites, nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through SagePoint Financial Incorporated, member FINRA SIPC. Insurance services offered through Elliott Wealth Management, LLC, not affiliated with SagePoint Financial.